Hey traders, it's Josh at Option Sizzle doing a wrap up for Monday, February 1st. I'm going to talk about a trade in Amazon, two trades. Actually, one that we went over in our elite chat room going into earnings, and another one that we went into on Friday where a few individuals were able to lock in some nice profits after after we saw this big sell off today. I'm going to go over the first one and going into earnings here. And if you look at the chart, we had found support at this level here as we went into earnings. Earnings was uh, between the 28th and 29th, of Thursday after the close. We had a gap higher here into this 130 area, and it's been selling off ever since. What I was looking at was the order flow in the option market was kind of a tip. We're seeing the 140 calls being sold, and as I look at this, you look at here, we have the top end of this range, and if you look down below here, we're kind of towards. It's not exactly the middle of the range, but it's in between this level here. With that, I had the idea of doing an iron condor, kind of the same trade that we did in Apple, because we're in that middle of the range. And with order flow, seeing that we're seeing the 140s trade or the 140s being sold, it made a little bit more sense. So we actually, the trade that I put out there was to sell the 140 call and buy the 145 call. And so pretty much an iron condor is a call spread and a put spread, and you sell both sides of it if you're selling iron condor. So we sold the 145 or the 140 145, and then on the put side we did the 185 180. And it's a little bit wide, but I wanted to be a little bit more safe because I figured if this really did sell off here, it could really gap below here. And these individuals that had bought up here are going to put a lot of pressure to the downside. So I wanted some pressure, and actually the spread that we got in the 85.80 put spread, we actually got some pretty decent profit, and it's what's called juice, but premium. We're able to sell it, even though it was so far out of the money. We're still able to get a decent amount of premium to sell those. So I figured to just trade around in this range here, and we would kind of, if we hit into the top end here, we would bounce back off, and we're seeing the 140 and the option order flow being sold. We figured we would line it up the same way that we did in Apple. Take it to the analyze page here on my platform, and you can see here on the 28th, this is when earnings was going into the close. And when I was talking about, we see the 140s, 221 by 238, and the 145s 135 by 140. They're pricing in about a 10% move here. And we look on the 85 and 80 side of the board, and you can see here as well, we were we got a little bit, but not too much. But it was a way to play the implied volatility, and that's what I was looking to play here. So we sold this at $1, and going into today, that spread actually, let's move it into today's date, and let's put the same trade on the iron condor here. So the same trade to one here, 140. $145, and then 85, 80. You can see it's trading at 14 cents right now, and so the majority of this move here, this is going to be a trade that you could let exhaust all the way to zero, but you got a majority of it here. You've gotten 85 cents out of this trade. It's about time to be able to move on and get out of it. And you can see here on 10 contracts, on a very wide spread as it was, we still made about 865 bucks on a 10 lot, and overall it was a credit that we got, and now we could buy that credit back for 13 cents, take risk off the table, and move on from the trade. The other trade that worked out really well for a few members, on Friday we were talking about one of the members wanted to short going into earnings, and I mentioned to him that playing the earnings is not a good idea. Just wait for the earnings to come out, and then look to play the direction. Well, 130 came out here. We hit resistance and kind of just gapped higher and sold off from there. He wanted to get into a deep in the money put. Let's take a look on Friday's activity, and he actually wanted to get into the March contract here, the March 140 put, and you can see it closed at $16. Before it really started to sell off, he wanted to get in at about $13. But what I mentioned to him is that when you go into deep in the money puts, is you're putting up you're putting up a decent amount of change. You're putting up $16. It's not as much as shorting the stock outright, but you're putting up a decent amount. And at the time, it was about $2.70 of extrinsic value that they were being put on the table. So I mentioned to him, if you're going to play the downside and you think prices are going to sell off, it would make more sense to jump into the 125, 115 spread. And what that looked like is you'd buy the 125 put, and then you sell the 115 to create a spread, and the amount that you pay for that spread is your max loss. So at the time he bought it for $2.88 at the time. This is right before it started to sell off, and we'll rewind this back here. So $2.88 he was able to get that spread for. Well, the difference between your max profit is going to be $2.88 minus the spread difference. So $10 minus $2.88 is going to be what your max gain is going to be. Your loss is going to be the premium that you paid, the debit here. So you can see it actually on a 10 lot here. By the end of the day, picking up at $2.88, he was a pretty good on a profit wise. Well, we come into today, and you really saw that sell off, and that profit here was at one point a little bit more. Prices closed coming back in here into the 118 area, but this actually widened all the way to the 115 level here in a matter of days. I mean, we're talking about 100% return, over 100% return in just a matter of a trading day, one trading day, a few hours, if you want to say that. But those are the kind of opportunities that we do go over in the elite chat room, where traders have direct access to me, and we go over different kind of trade setups or different things that we're seeing in the option market and how we can align them. On this one here, really paid off, and didn't think that would really sell off that aggressively today, but it really did. Good thing that I was able to get him to take profits into this 115 area, because we could see that really bounce back aggressively and started to hold the support level. Now this looks as a bullish trade here. We got very big volume coming in here, holding this level of support. Potentially this could set up as a risk to reward trade to the upside in a favor. Anything closed below here, you're going to look to take an exit out of that trade here. But we just wanted to go over this trade. We had talked about it with a few people on Twitter. So overall, if you're interested in opportunities like this, or learning more about option trading, or just getting instant updates of unusual option activity, in our chat room, I update every time I see something coming across my screen, or just different trade setups where we can use options such as this AMZN calendar spread, or the put spread that we put on that's worked out pretty well into a market that was pretty choppy today. So I'm going to cut it there, and if you have any questions, feel free to shoot me an email.